Hey Bowtie Nation, Joseph Hogue here with what's becoming the most popular series on the channel, a look into the stocks being targeted by the biggest tech companies. We highlighted NVIDIA's purchase of 6 stocks last week, with the chipmaker spending hundreds of millions of dollars, and ownership as high as 8% in these companies. Those stocks are up an average 64% in the last 6 months as the companies grow into the potential and the reasons NVIDIA is buying. But that is nothing compared to what I found when I followed the money Amazon is spending, buying over $2.2 billion in shares of 10 companies. In fact, Amazon has over $1.7 billion in a single company and owns almost 16% of the total shares issued. I'll reveal all 10 stocks Amazon is buying, along with the 7 stocks to watch, and how to use these insider reports in your own stock research. This first stock Amazon is buying is also its largest ownership stake, Air Transport Services Group, ticker ATSG. Amazon owns 12.7 million shares, worth almost $280 million, and almost 20% of the total company. Air Transport offers a complete air leasing and support services to blue-chip companies in both passenger and freight, leasing aircraft, freight operations, maintenance, and servicing leases. But now this investment is likely different for Amazon than some of the others on the list. This one isn't for that big return or for the exposure into fast-growing technology, as it is a strategic investment. With its major controlling interest in ATSG, Amazon has a partner in its freight delivery, with Air Transport providing and leasing planes to the company. Now, ATSG isn't a fast-growing company, with revenue down slightly this year and expected up just 4% next year to $2.1 billion in sales. It's also not terrifically cheap at this point, at 20 times expected earnings, though this one does have that very dependable cash flow with its Amazon tie-up. Now, it's possible this one could be a takeover target by Amazon in the future, so there is some upside potential and the revenue growth is dependable. But it's not the growth stocks others on the list could be. We're just getting started into our list of stocks Amazon is buying, but the only thing better than following these tech giants into these publicly traded stocks is buying in before the market. All of you out there in the nation know I come from this venture capital world of pre-IPO startup companies and can tell you there is no better opportunity for returns. It's how Peter Thiel made over 4,000%, 40 times his money as an early investor in Facebook, and how Elon Musk made his first billion with PayPal. It's also why I'm always on the lookout for great investing platforms from that startup scene, letting you in on these types of investments before they issue stock. And I've just found one that offers more deals than any I've seen. Link2 gives you access to high-growth startups like Anthropic and its AI model cloud, one of the top 3 AI models, along with ChatGPT and Gemini. You can also invest in digital assets platform Ripple, Musk's SpaceX, and his xAI startup. And the best part is, this is one of the most accessible early-stage platforms I've seen, with a minimum investment of just $2,500 to start. Signing up takes less than 5 minutes, and you'll be able to get a referral code to make $1,000 anytime someone you know signs up. Now the downside is, right now this is only open to accredited investors, so make sure you look for the special invite link I'll leave in the description, or scan the QR code here to see if you qualify. Next on the list, Astera Labs, ticker ALAB, just went public in April of this year and was available on the Link2 platform before that, and is already up 86% on the boom in AI stocks. Amazon owns over 277,000 shares of the company, a relatively low stake of just 0.17%, worth $27 million. Now, even at a very expensive valuation we're going to see later, Astera may be one of the best ideas on the list. The company offers connectivity and networking solutions, which, while so far have gone under the radar in that AI boom, could be the next big bottleneck in artificial intelligence. That's because the immense amount of data and processing going on in those AI models is going to stress out the current system for connectivity and networking, with only companies like Astera being built specifically for that higher demand in AI able to provide the solutions. Revenue is expected to grow 60% next year to $615 million, with earnings already positive and expected to $1.17 a share. But this is still a tiny company on its financials. Well, tiny until you consider the valuation. Even on that expected revenue and earnings, shares are trading for 27 times sales and 82 times on a price-to-earnings basis. Now that is terrifically expensive, so if you are buying shares here, I would hold back some money in case we see better prices, but the company's position in that data center connectivity and networking theme should mean it grows into that valuation over the long term and produces solid returns. IonQ, ticker IONQ, could be the next big theme after artificial intelligence, the speed of quantum computing. Amazon owns just over 1.9 million shares here, worth $57 million, and almost 1% ownership of the company. So already here, we see that Amazon is making much bigger investments than NVIDIA did in its stocks, investing tens of millions and even billions in a stock that I'll show you later. It's also investing for different reasons though. Whereas most of NVIDIA's stocks seem to be geared towards the nurturing companies in that AI space, those that would be buying NVIDIA chips, Amazon is taking a broader view and investing across next-generation technologies. IonQ is positioning to be a leader in quantum computing, that next generation of processing speed, and a market it estimates to be worth as much as $850 billion by 2040, across everything from AI to cryptography. For a long time seen as nothing more than fantasy, quantum computing uses the laws of quantum mechanics to solve problems too complex for even the most advanced computers today. Explained, it's computing power that could be 100 million times faster than a regular chip. Of course, we're still extremely early in this technology, and even a leader like IonQ isn't quite there yet, though it's still got some smaller scale products out. While revenue is expected to surge 88% this year and 99% next, it's only at $83 million in sales, so this investment is also very much ahead of its time. And again here, we see some almost comically expensive valuations on the stock. It's still posting negative earnings, so no PE ratio, but on a price-to-sales basis, it's at 79 times even next year's expected revenue. But even that might not matter when quantum computing becomes a reality, because this will be a $100 billion company at that point, but it's also likely further out than even the upside in Astera Labs, so maybe dip your toe in now, but put this one on your radar for later. We've still got 4 Amazon stocks to highlight, but remember, we know the company is buying these because every company or large institutional investor is required to file a Form 13F with the Securities and Exchange Commission, the SEC, disclosing their investments in publicly traded stocks. Now, that disclosure is meant to help the SEC head off any possible stock price manipulation by these big hedge funds and other big money players, but can also be used by investors to jump in on those investments ahead of an acquisition or just a bump in the share price. You can always find these 13F filings by going to the SEC EDGAR database and searching for the company name, then clicking through wherever you see the most recent 13F report for a list of those investments. Now, understand there are different reasons a company might buy shares in another, and it could mean a difference in returns for investors. For example, first, as in the case of NVIDIA buying shares of ARM, it's getting a say in the shares of a major supplier. ARM licenses the architecture that goes into semiconductors, so it's a critical component for not just NVIDIA, but also Intel and AMD. NVIDIA was blocked by the FTC from buying the company outright, but an investment gives it a spot at the table. A company may also be interested in a future takeover of another and want to get its foot in the door with a large block of shares to ward off rival buyers. This is likely the case with Amazon and its ownership of Air Transport Group, with nearly a fifth of the company. And then there's also just the good old return drivers for investment. Companies like Amazon and NVIDIA are cash machines, generating tens of billions of dollars in cash each year, and at times may run out of projects to reinvest that money back into their company, so they're looking for stocks to buy. You'll notice in all these stocks, or in the NVIDIA video, that the buyers have inside information into these stocks within their sectors. They know which companies are going to do best, and they're investing in them. But as we say here on the channel, it ain't all rainbows and unicorns, and there is a warning to using these 13F reports to invest. First is that companies have 45 days after their quarter end to report these to the SEC, so there is a big lag in the investment. Most of these stocks are held long-term, so it's not a matter of Amazon buying and then dumping on a quick return. But understand there is a lag to that reporting. Also, though, you'll see these stocks jump when that 13F is reported, and often will give up some of those gains in the months following. Now, I always recommend use these 13F filings as a heads up to find the stocks to start your research. If it looks like a good buy, then maybe invest some right away, but leave some cash aside to invest if the price comes down later. For example, shares of SoundHound AI jumped nearly 70% in February when NVIDIA reported its stake in the company. The stock surged another 133% over the next month as investors rushed in, but enthusiasm died back down quickly after. For patient investors, though, the stock has jumped back up again as that growth theme plays out, and the shares are up 274% this year alone. Amazon's investment in shares of Marvell Technology, ticker MRVL, isn't even a blip in the ownership terms. The tech giant owns just 225,000 shares worth almost $20 million of the $76 billion data infrastructure and chip architecture company. And while that might not be much in ownership terms, you don't want to overlook this company either. Revenue is expected 35% higher next year as we move into that massive data center build-out that's going to benefit Marvell, and earnings are expected 73% higher to $2.53 a share. Now, on those expectations, the shares aren't nearly as pricey as others on the list, trading for about 35 times on a forward PE basis, just over 10 times its revenue. Amazon's largest dollar investment is in shares of electric truck manufacturer Rivian Automotive, ticker RIVN. Amazon owns over 158 million shares, worth $1.9 billion, and more than 15% of the shares issued. While shares of Rivian have been under pressure along with all things EV on fears that President-elect Trump is going to kill subsidies to the industry, Rivian has the partnerships and the cash flow it needs to grow and become the EV truck maker. Rivian is a major supplier of trucks to Amazon, delivering over 10,000 electric vans with a contract for up to 100,000. Rivian decided to end its exclusivity earlier this year, freeing it up to sell to others, but on that 15% ownership stake, the partnership is still very strong. The company has also partnered with Volkswagen in a $5.8 billion deal to share software and electrical architecture that shores up immediate cash flow needs for the company. And here, Rivian just announced last week approval for a $6.6 billion loan from the government to build out its Georgia production facility. So here, while cash flow and earnings are still negative, the company has the cash it needs to keep growing, with estimates for 13% growth next year to $5.3 billion. And so if Rivian can reach that point in production like Tesla did, where the costs come down on scale, this could be the best deal on the list. It's already cheap here at just over 2.3 times on the price to expected sales basis, and has the flexibility to become the leader in EV trucks. Twilio Inc., ticker TWLO, was a pandemic darling promising to help businesses reach customers wherever they are. The stock has come down since, but are up 63% this year, with Amazon holding 1.7 million shares, worth almost $182 million, just over 1% ownership in the company. Twilio offers a complete customer engagement solution on one platform, from messaging to emails, phone calls, and all driven by developing AI technology for some of the largest companies out there. This isn't exactly a growth stock anymore, with sales expected up just 6% this year and under 8% growth next to $4.8 billion, though it is cash flow and earnings positive, so quite a bit less risk on this one. The shares aren't particularly cheap, but then again, nothing is after this year's bull market. The stock is trading for about 24 times expected earnings and just 3 times on a price to forecasted sales basis, which may seem cheap, but on that kind of growth, not so much. I'll show you those last 4 Amazon stocks later, including the 3 that I wouldn't be buying at this point, but you won't want to miss our prior video on the stocks Nvidia is buying. The chipmaker is becoming a cash machine and putting that money to work, and the company's about to take over that AI revolution. So check that video out next. Vital Farms, ticker VITL, has surprisingly strong growth for the agricultural space and is up 159% in the last year. Amazon owns 1.5 million shares, worth just over $50 million, or about 3.5% of the company. The company partners with over 300 family farms to source pasture-raised eggs for grocery stores and food service across the country, with a goal to double its household exposure and triple the number of stores it's sold in by 2027. And that's really where the growth is we'll see in a minute, in that growth of market share into new stores and the higher household penetration. Revenue is expected up 27% this year and 18% next to $713 million, with this one already net income positive to $1.22 a share next year. So obviously egg sales aren't a growth market, but it's the company's ability to take that market share with a pasture-raised organic alternative from those larger producers that is driving that growth. What remains to be seen is for how long and how much of that market share can it take until the growth does slow down. Their shares aren't too expensive here at 27 times forecasted earnings and 2 times next year's revenue. Still a little bit of a growth premium on valuation, but not like the tech stocks that we've seen. Looking at that full list of Amazon stock investments, all 10 companies it reports a stake in, you'll notice I didn't cover 3 of them: Nautilus Biotechnology, Owlet Inc., and SmartRent Inc. All 3 of these are very small companies, and with the exception of Owlet, don't look like they're producing the kind of growth they need. More than anything, it was really the cash flow situation though. For example, looking at the cash flow statement for Nautilus, we see an increasingly negative cash flow from both operations and free cash flow. We also see an end cash position that leaves the company in jeopardy of not being able to continue. And that cash position is important for any company, but even more for these smaller startup-like companies. Folks, cash is like oxygen for these. With it, they can breathe and hold out while that growth improves cash flow. Without it, they're going to suffocate and die, so it's one of the first things I look for when investing. Invest before everyone else with the pre-IPO deals on Link2. Get shares of companies like Anthropic and SpaceX along with your $1,000 referral code only with the special invite link below, or click on the video to the right to see those stocks Nvidia is buying, up an average 64% in the last 6 months. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.